Hey guys, Mike here. So first I want to say thank you for all the comments and everything, wishing my family and me well and everything, but we're good because we're on the east coast of Florida and it was the west coast that got hit the hardest, and Georgia as well if I'm not mistaken. So thoughts and prayers out to those folks. Hope everything is okay. But again, I appreciate all your concern and stuff. And so obviously another green day in the market. What I'm going to focus on in this video, though, is I'm going to show you something. There's a narrative being painted, right? You're hearing it a lot right now. And I'm going to show you why this narrative of the soft landing is being painted, because you're seeing economic data that is showing obviously things are slowing down, right? The Fed is getting what they want. I'm going to show you that. And it's not that the market is ignoring it. They're just painting a soft landing narrative. A soft landing, just picture a plane. The rates are up, the economy's slowing, and then all of a sudden they're able to hit the soft landing, and then the economy takes back off, right? Hard landing is the plane comes down, that'd be the economy, and then it just hits so hard, the wheels break off, it explodes, boom, the economy crashes and burns, okay? And so the Fed has been able to pull it off one other time. And so I'm going to show you that data to let you see what's happening. And, I'll show you a picture because a picture is worth 1,000 words, what I'm talking about. I'll also show you the two things that are really focusing on real hard right now, and why you could maybe see a September that's not as bad as others. Okay, so just keep that in mind. And also, man, the earnings growth they're expecting, it's shocking. It came out today, I saw it, and I'm like, what? And I definitely want to show you that and get your opinion, because it is an enormous jump coming into Q4 of this year and going into the beginning of next year. And at the end, I'm gonna rant on something. I'll keep it at the end for those that like rants. But one thing, it just burns me up, and I don't get it. I'm not a dumb person. I'm not the smartest person, not the sharpest tool in the shed, but I'm definitely not dumb. And I just don't get how this system is allowed to stay in place and how people even think it's fair. I don't get it at all, and it just melts me when I sit here and look at it. And the reason why I bring it up, because something happened to a friend of mine, and he was all happy until we looked at this system right here we're talking about, and he went, "Oh, that just sucks." And so, I'll talk about that at the very end for those who don't want to hear about it. But getting into, this is what we're seeing here. Picture's worth 1,000 words. Check this out. This is an iceberg. We all know the smallest part of an iceberg is on top of the water. You can see it. That's the rate impacts we can see. And then beneath it, these are the rate impacts we haven't seen. We just don't know yet, right? And so here's what they're taking into is a soft landing. You got new orders. Obviously, new orders are not picking up, which is not a good thing. They're just kind of stalemated right now. And new orders, this is the business cycle. As new orders pick up, inventories decrease, that's when the economy is really expanding, right, and doing well, and the stock market usually loves that. Now you got the Dallas Fed Manufacturing Index, and this is just a mess. You can see that's definitely a downtrend, but you got negative 17 versus negative 19, so not as bad as they thought, and negative 20 the prior month. New orders up to minus 15.8. Shipments tanked to minus 15.8. Prices paid actually jumped, which is what you don't want to see, to plus 17.4. And wages jumped to 34.9. And CapEx actually weakened and is still contracting. And then you got employment growth. You've seen off these jobs numbers that have been coming out, right? This is obviously slowing. And this is change in payrolls month over month. Then you got the line, that's the 3-month average payroll change. And then the estimates, you can see this is ticking down, slowly but surely, right? Then you got this right here, which we hadn't anywhere near felt the effects of this one yet. The refinancing risk grows to record high, right? We got so many companies that have not had to refinance. Above this line is bad, below this line is cheaper financing, and you can see this goes all the way back to the 90s, and this thing is way up there. So we haven't even felt that part yet. So if rates stay up there for say another year, we're definitely going to get to see this. We just hadn't felt it yet, and it will be absolutely horrific for the bottom line of most of these companies. And you'll see a lot of the zombie companies go bankrupt when this happens. And then we got corporate profits, which is where we're seeing it. This contracted by 6.5% year over year in the second quarter of 2023. Acceleration to the downside. Obviously, you can see it from prior quarters, 1.8% decline. But I will elaborate on this a little bit in just a minute and talk about it just a tad bit more. And then you got GDP, which came in less than what it was supposed to. It was supposed to be 2.4, came in at 2.1. You can just see, though, going back September of last year, this has been decreasing, okay? Then you go over to U.S. personal consumptions, and obviously that took a major decrease. And then personal consumptions, core price index, and that also took a big decrease. But, you just look at the chart and go, hey, I think that's absolutely decreasing, which it should be, right? Which, of course, looking at that, who loves this, right? It should be the Fed looking at this going, hey, it's working. The rate hikes are working slowly but surely. All this stuff's grinding down. So the market goes, that's great. That means they won't have to do any more rate hikes. And that means they won't have to hold those rates higher for longer and all that good stuff. So we're forward looking. So we're going to go ahead and keep going up, right? That's pretty much the picture they're trying to paint at this point in time. And they could be totally right. It doesn't matter, right? Because like I always tell you, don't matter if they're wrong or not, they'll just sell you back down. So they did last year. They tried to sell us down last year, trying to get ahead, thinking it was going to be a recession. There wasn't a recession, and boom, let's run it back up. Okay, so that's how it works. But the things they're looking at, more importantly, going forward, is this right here. The yields topping out, right? Here's the 10-year. And what it looks like. It looks like it's about to try to top out and head back down that trend line to me. Then you go over the 2-year. Same thing. If you look at the 30-year, it's the same thing as well. They all look identical, right? So if these roll over, like we talked about, you're going to see, especially high beta stuff in tech, it's going to most likely go up. And then you look at the dollar. The dollar, starting to sell off here, like we talked about. And if it goes back down into this wedge right here and just starts wedging out, that is a decreased dollar. And why is that important? And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Because remember, especially all the companies that are holding up the indexes, where do half their income come from? Overseas. So a weaker dollar means when they convert all that revenue and stuff back into US dollars, they get to keep more. That's what I told you guys what happened in the first and the second quarter. What about the yields coming down? Well, one of many reasons is because as the yields come down, people say, well, I wasn't going to bonds. And what have we seen the last couple of years? People talk about treasuries, bonds, everything more than ever, right? Buying into them. Well, as those come down, they go, wait a minute, that's probably pretty good for the stock market. My returns will probably be higher in the stock market, so I'm going to go with the stocks, right? So there's less competition for them, and there's other reasons as well. Now, here's the earnings part. And I apologize if the wind's too much, but yeah, you can see we're still windy as heck out here. But, it's the earnings growth that they're projecting here going over the next 3 quarters. It's astonishing to me. Absolutely astonishing. And I'm curious to get your input on this one. Because look at this. So Q3, which we're in now, they're expecting like maybe 2%. But look what happens in Q4. 10% earnings growth. It's going to drop down 8% Q1 and then up about 12% in Q2, which would be obviously April through June of next year. And so that's just stunning to me. And let me know on the bottom, do you think that's going to happen? Because don't forget, what's going to be starting to kick in through the next 12 months, right? People paying back student loans, third largest bill in the household. Keep that in mind, right? What else is going to be happening? The rates are still going to be here. I don't mean they're cutting anything. They may not do another rate hike, but still we're setting at rates we hadn't seen in 23 years, okay? And it will take, it just continues to grind. It continues to take effect. It's like cancer. Can't see it, but it continues to grow, right? And so that's what you're seeing behind closed doors. And you'll see that, and you should see this data continue to grind down. So I'm not really sure how revenue growth for these companies is going to be that much better, because not like the other countries are doing that much better than us, right? And so, again, we'll see. I wanted to get your input on that one. I was stunned when I saw that come out today. I was like, wow. Now, what did I tell you yesterday about the S&P? What was I watching out for? I'm looking to see how it handles. This is like a 4-hour supply right here, and see if it can get through this, or does it actually just come up to the top, get rejected, and sell back off. That's what I'm really looking at for on the S&P. And that's exactly what played out. We came up, hit almost the perfect top of the channel, sold off quickly, went back up, tapped it 2 more times, and ended up selling back off. So we're still sitting in that 4-hour supply area, which we'll watch out for. But when we zoom out and look at the S&P, you can see where it's at right here. If we can get out of that 4-hour supply area, it'll be in a volume gap. It'll move fairly quickly up through this right here, up to where there's actually a gap above right there where you get resistance. So I'm not saying it's going to be tomorrow or even the next day, but I think we end up going up there, rejecting off that gap at first, and then coming in and filling it stuff. Because right now we're still turning into this upward channel. And I understand we're coming in September, and there's so much data, which we're going to get into, by the way, which is crucial for tomorrow. I mean, we are loaded with data, and this market has proven to react off the news, for if anything, okay? And then we go to IWM, another green day for IWM, starting to get up in this volume gap, got rejected. If we pull the moving averages up, right at the 50. And this is what we talked about with the 50 act as resistance. Yesterday we talked about that, and it did. Bounced, got rejected right off the 50, right below that gap right there. If it can push above that, obviously it's going to move fairly quickly through this gap right here. You can see finally got the bullish MACD cross. We want it to come above that 0 line. That's where you'll really get the launch. If that happens, that will be very bullish for IWM, and it will move quickly once it gets above this resistance right there, like it has in the past. So I mean, you just look at what's happened in the past. This is what normally happens. Now, does that mean anything for IWM? Could just stay in this range. Again, I always keep saying until you get above like 200, none of it really means anything. But then we go back to Tesla. And what we talk about with Tesla, we said the 260-ish area is going to be key, right? That's where we'll probably get to. We'll end up getting there quickly. And then after that, we'll probably consolidate. Well, you can see if we pull this up, we got the 260.51 before we got rejected on Tesla, and then started kind of consolidating sideways. And so we'll see if we can move back up and push back through this. But the one thing I want you to notice, and I noticed when I was looking at the charts today, going to the 15-minute, you're starting to see this channel form, right? So we got top right here, we see rejection, 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 right? And then if we go down and look at the bottom, you go, oh, well, let me see here. If I pull this out right here, you can see this one right here. You got multiple rejections, multiple support areas. And then so we'll see how long it will trade in this small, tight range. Because if I draw a line right below that, you're going to see right below will be another trend line, right? So it's in this upward channel now. And I just want to see if it's going to be able to hold this channel or is it going to drop down. And I'll add that line to the bottom one after I'm done here. But that's really what I want to see right here. And that would obviously continue to lead us up. I'd like to see a little consolidation in Tesla going in September. But, you know, once you can see the area gets thin, once you get past 260-ish, because obviously, you know, the way it moves so fast, there's not a boatload of resistance coming up here. We got some gaps above. Again, you can see right there as we pull it out. And so, you know, this could move quickly if it can get above that and start running, which a lot of people were expecting. Again, we're coming in September. We'll see if this ends up being one of those crazy months. I'm going to talk about that a lot more tomorrow because it is the worst month of the year for stocks. But that might not be the case this year, so we'll have to find out. Now, looking at Nvidia, this is pure manipulation happening on Nvidia today. It was moving up, obviously in this megaphone type pattern. It was actually I think it was going to go for all-time new high today as well. And then some news came out right after lunch that Biden blocked selling Nvidia AI chips to Middle East over China fears. And what happened? The stock sold off right after this came out. Now here is where manipulation comes in at. Here's what's funny about this. This is not new at all. We already knew about this because the 10Q that Nvidia released Monday says it right here from the earnings. USG informed us of an additional licensing requirement for a subset of A100 and H100 products destined to certain customers in other regions, including some countries in the Middle East. And they sold alternatives to China when this happened, so they'll probably do the same thing to them, but it didn't matter. And this is how you get the stock for cheaper, right? And so they end up pushing it down. So just pure manipulation, nothing new, nothing to see there. And then we got Apple here, another big day for Apple. It got right up there against that gap and got rejected today. It was moving strong. Again, this isn't like a Tesla or Nvidia where it's going to move 6 to 8% a day or whatever. You get 1 to 3% on Apple and you're doing good. But you can see we bring the moving averages in. It got above that 50 right there. And you can see plain as day, this is a great example of how gaps can act as resistance or support either way. And this today I was just resisting. It tried 3 times and didn't break into that. But when it finally does, it's going to move very quickly because it'll be in a volume gap where there just really isn't a lot of resistance because we're talking about getting close to all-time highs again. And so the air is thin up here, which means Apple can move quickly because so many people are buying it, right? Now, when it comes to earnings, not too much really. You're going to have Dollar General, and you'll have Campbell. I want to see if they're still able to pass on these expenses, especially Dollar General. It's supposed to be a dollar store. The joke is they're not a dollar store anymore, right? Then you'll have some big ones in Broadcom, Lululemon, Mongo, Sentinel, which is another semiconductor stock, Dell, VMware, and PagerDuty. And then here's what we're talking about when we talk about a boatload of economic data coming out tomorrow, especially for open. Continuous jobless claims, core PCE price index month over month, which they're expecting no change. Core PCE price index year over year, they're expecting this to increase. Initial jobless claims are expecting to increase, which you should if it aligns with the rest of the jobs data. Then you'll have PCE price index month over month, year over year. Again, they're expecting this to increase. Personal income month over month. And then personal spending month over month, which they're expecting to increase in that one. And then you'll have Chicago PMI. And so you'll be looking at a lot of data, which absolutely could shift markets either way. If the jobs data continues to go as it's been going, you should see continuous jobs claims jump in initial jobs claims as well. So we'll see if that coincides with the other ones that we've been getting. And so, and the other thing, you know, I was just talking about at the beginning, you know what aggravates me? You know, one thing about me, if you know anything, if you're watching this channel, and I want to say this to the end so those who don't want to hear it, they can click off. But, you know, because I'm definitely going to rant here, because the one thing I hate, and maybe it's just me, is, and I've said this in the past, very recently, is the IRS, our tax system. Like, it just sucks. It makes no sense whatsoever. And I'm going to show you what I'm talking about here. I'll show you I'm not married and everything, but I'm going to show you the individual, like single taxpayer tax systems, but the marriage is the same way. They both are just totally messed up. It's harder for singles because they get a lot less deductions than people who are married and have kids and stuff like that do. But here's what to me just makes no sense to me, and I can be missing the boat on why this should make sense to me. But somebody please explain to me, because I know somebody who watched this is a CPA, right? Explain to me how in the world that, go with this right here. Look at this. If you get a raise, or say you get a degree, you work hard, you move up, and you're making, let's say you made the max, $182,100, you're in a 24% tax bracket. And let's say you get a raise of $210,000. All of a sudden, you move up 8% in the new tax bracket. 8% now in the new tax bracket. That's a lot to be moving up, right? What's even worse, though, is look at this right here. But the person down here making $578,000 is sitting there going, okay, well, I got my raise. I'm moving up now. Let's say they go from that to $1 million, $1 million a year. They don't have to pay any more income tax. They stay in the same bracket, 2 million, 5 million, 10 million. They stay in the same bracket. Yet, God forbid, you try to work hard and go from 182 to, let's say, 220, 225, whatever number in there between that bracket. You're going up 8%. What's even worse than that is, look at this one. If you go from $44,725, this is what happens to a lot of college grads, by the way, to anything over that between $45,000 and $95,000, your tax bracket jumps 10%. That is absolutely ridiculous. That doesn't make any sense. And don't think this is normal, because in the 60s or 70s, you know, we have this progressive tax bracket. It used to go way up there. And so if you went from $500,000 to $1 million to whatever it was, you end up paying more. But what happened? The rich got a hold of Congress, started buying them off, and then they became Congress, and then in Congress all became multimillionaires, and they went, well, dang, over the years they said, we don't want to pay this kind of tax. And then they came with this trickle-down economics effect where they said, no, if we just make sure the rich keeps making more and more money, and then the poor middle class open their hands and mouths up like this, that they'll just pour it down into us, and all of us will get wealthy. You know, that was the whole thing. It's a bunch of BS. Right? It's a bunch of crap. But to sit there and expect a college student, because that's usually what you're doing, right? You're going to go from 44 something to maybe 60, 65, to all of a sudden jump 10% in taxes. And just do it on your phone. Just forget all the deductions, anything like that. Just take the top in one bracket, the top, and say you got a $20,000 raise, and put you in the other bracket, and do the math on it. You will be very upset. You will be very upset. Especially the worst about the tax bracket system is, or our tax system, is, I'm not going to ruin these numbers, but I'm just, you know, I remember I went through this with my accountant a few years ago, and we had moved up in this different tax bracket, and she said the worst thing about that is you're in no man's land, because you're going to make more money, but you're going to pay a lot more in taxes, because you guys just lost all these deductions, and because they get phased out, and they get phased out very quickly once you hit a certain level. And so I'm just looking at it going, man, that sucks. Because I had somebody that just happened to me. They got a sweet raise. They were telling me about it, and then we looked it up, and I was like, ooh, man, you just went in this tax bracket. And they go, what? And I explained it to them. They were mad, because once we did the math, like, they'll make more, but it's nowhere near what they thought they were going to get to keep. Nowhere near, because they just lost a bunch of deductions. Everything got phased out. And so, yeah, I don't know. Let me know what you think. I mean, it makes no sense to me. It just doesn't make any sense whatsoever. How are you going to have people, they're making between $40,000 and $100,000, and you're jumping them 8 to 10% some of these tax brackets. I mean, and then the people who get way up here, you know, making $400,000 to $600,000, and then you keep going, they don't move anymore. It's like, no, we're good. And once you're in the millionaire club, once you're up in that club, you get a whole different level of like what deductions and stuff you'll be able to take that other people just can't take, right? Because that's who the tax code is written for, right? They pay Congress to pass the law, so they're not doing anything wrong. It's not against the law to have those deductions, all right? And so, anyway, hope you guys got some out of it, guys. I'll end up seeing you tomorrow. Please hit that like and subscribe button. Thank you for all who watch and everything. Hope everybody's good on the east side of Florida and Georgia as well. Let me know in the comments if you are, and I'll see you tomorrow.